The bear is back in town. I even got my Hulk gloves here for this video to explain what has happened today. DJI, the FTSE, the global economic outlook has just fallen again. It's starting to seem like a trigger for another bear. Maybe the V recovery is gone. So stick with me on this video. I'll explain to you what has happened through the timeline. I'll explain the 3-tier stocks that we need to watch out for. And there's one ultimate stock that's resilient to all this. So stick with me on this video and I'm going to explain to you what has happened today. Hi, welcome back to Family Investment. The bear is back in town. If you check the VIX, it's up at 40 points just now. 40 points meaning the sell-off has begun. The sell-off has begun ever since Nasdaq hit its 10,000 peak points. Recovery, the Dow Jones back to recovery, and now it's just going the opposite way, as it seems as it stands today. So let's begin with the first section. What is the timeline? What's happened? So it's all started off with the Feds having their announcement yesterday. So the Feds come in every 2 to 3 months, speaking about the current economic climate. They speak for America, but what happens in America normally reflects and ripples effects across the whole globe. So the Fed was basically dovish yesterday. Dovish meaning they're retaining the low interest rate between 0 to 0.25. They're not going to go negative, and neither they're going to increase. And then the key word is long-term recovery road. The Fed mentioned not just 2021, they mentioned up to 2022 before they could see an increase in the interest rates again. But because of this long road to recovery, it's just not feasible, not palatable for investors' taste. And then secondly, the second news. So when the Fed came out, the market dropped by 2%. And a couple hours later, there were news about the second wave of coronavirus. 21 states in America are experiencing people come back coronavirus. Numbers are creeping up. So that scared the living hell out of investors, and then stocks started dropping further. 3%, 4%. The third point that I would like to point out is the oil. Then the oil starts getting involved. The oil, the Brent dropped 38, they dropped by 8%, WTI dropped by 8.6%. So they joined the party. The oil came and joined the party as well, because the contract's expiring on the 21st and we're sitting on the 11th of June. We're less than 2 weeks away, and thought if the coronavirus waves come in, lockdown come into effect again, we're going to have surplus of oil again. The sell-off continues as we stand today. So what's going to happen tomorrow? We need to watch the Chinese, Japanese market and the European market, but I think most likely there's going to be a sell-off, and then this will just ripple again to America, and let's see where we stand. It might be 2 days, it might be 3 days, or it might just bounce back up. But then think about it, we all hit all-time peak high. The Dow Jones, if you see the Dow Jones, it hit all-time high. It's at a point where it's boiling hot, it's about to sell. If you look at the graph, it's boiling hot, it's about to come down again. How fast, how momentum, we need to watch. And if you see the Nasdaq Composite has been steadily high on the stochastic, above 75 for at least since April. For the last 8 weeks, it's all-time high for the Nasdaq. So it's starting to boil over, it's starting to fall over. So it might come, it might bounce, but we have to see the trend. But from what you see is the trend, it looks like it's a sell-off as we stand. So for the next part, I would like to speak about the 3-tier stocks that I would like to highlight here, and go into a bit technical analysis. So the first one is the tier 1 stock, which I call it FANG. That's it. It's quite long. There's 9 stocks. It's FANG. This is basically the biggest company in America. So if any time of these stocks falls over, please do consider putting them into your portfolio. And let's go, and I'm going to pick 2. Out of the 2, I'm going to pick my Facebook first. So if you check this graph out on Facebook, is it a genuine bear coming to town? If you look at Facebook stock, since April, Facebook's stochastic indicator has been beyond 70, beyond 80. They go overboard. It's being overbought. That's where you see the run. And then it's just overcooked. It's time for a sell-off. It's time for people taking, it's time for the stocks to come back down. What goes up must come back down, and then slowly it normalize and equalize itself. And if you check out Microsoft, it's a similar trend as well. They've been up there since the middle of April, and it's just a stochastic graph, and the RSI has just been up high 80 and close above 50 and just straight line up. It's bound to come back down. So it seems that folks might be taking profits, and it looks like it should be time to equalize. Secondly is the tier 2 stocks, which I call it the IPO class of 2019. These are the future technology stocks. So let me shout them out. Uber, Fiverr, Slack, CloudStrike, Twilio, Zoom, Beyond Meat, Pinterest. So these 8 stocks are my favorite 2019 IPO stocks. If they do go on any discount, please do consider putting them in your portfolio as high growth. High growth stocks are the ones that is going to go 2 times, 3 times in the future. There's a good solid company. Out of the 8, I think 6 out of 8 will be really successful, but do pick and choose what you know. Do your research before. And let's go a bit of technical analysis again. I've picked Beyond Meat and Pinterest. So if you check out Beyond Meat, it's been up and down. There's been a sell-off in May, and then stochastic shows that they've been on a high buy for at least 4 weeks, and then there was a dip round about June period, and then the V-shaped recovery back up again. So you can see a bit of like a W graph, as you can see there. And the RSI, the momentum is going up about 57. So it looks like it's bound to come back down. This cyclic graph is going to come back down. So it's on its peak and it's on its way down again. So that's a second proof that it shows that we might be most probably this week, next week, go on the bear market because of this cycle that we're going through. And then in Pinterest as well, very, very similar V, similar W that we can see. There's been a long trend of a good loads of buying between April and May, and there's a big dip on the 14th of May, and now it's going back up, and I think it's going to come back down again. So there's a trend that we're seeing here that's going up and it's coming back down. So this IPO stock slightly different from tier 1, which is my primary stocks. Tier 2, it looks like there's been an up and down. The cycle comes up, it looks like it's coming its way down in the next few days, maybe next week, but it looks like it's triggered. Okay, let's go to the tier 3 stocks. Tier 3 are the ones which I call injured stocks. Plenty of them out there. You've got like TripAdvisor, you've got Boeing, you've got all the retail stocks, you've got the airline stocks, EasyJet, IAG, Lufthansa, Delta Airlines, you've got Carnival, Royal Caribbeans, you've got all the casino stocks making profit. But do consider taking profits off the table. There's no harm taking profits. Seriously, that's all what stocks. Don't expect this stock to recover. Don't expect this company to hire people in because they're the ones that sacking people. They're the ones that keeping people unemployed. There's no cash flow. So about time, take profits, man. We're all retail investors. We're here to take profits. No loyalty, guys. No loyalty. Take profits. I'll pick 2 technical graphs just to show you why. Look at Boeing. Boeing has been on the low, up and down between the May period, going dip down, and now there's a sudden huge spike up. There's huge momentum pushing all the way up. You can see the RSI going beyond 80. That means it's overbought. It's when it's overbought and when the stochastic hits high as well, it's time to come back down. As you can see there, you got the 3 white crows on the candlestick. That shows a genuine bear trend for the coming next few days. It's a bear trend. It's overcooked. It's overbought. And if you check, Boeing has cancelled their airlines. People has cancelled their new aircraft. People, they're just sacking over 20,000 people in the market. So take profits, buy low, wait for the stochastic to go down right below 40, the RSI to drop below 40 as well, and maybe it will turn around. But at the moment, it's a sell-off. And let's go to Carnival. Everybody loves Carnival. Everybody's made money from Carnival. The same trend as well. RSI is over. It's not even 80, but it's going to be overcooked. Stochastic graph seems to be on a downward trend. Again, 3 white crows, meaning a bear indication. A great indication for bear. It's not 100% accurate, but 3 white crows is one of the most common bear theme that comes in through. And again, let me bring EasyJet as well. The same thing. It's got more than 3 white crows. It's got 5 white crows there. And then you can see the volume start decreasing. RSI overcooked, stochastic overcooked. So you see the trends are the same. The trends of them going up for the tier 3s are the same and coming down the same. It looks like a proper roller coaster. So do take profits. That's what I would do personally. I've already done. I don't hold any of these tier 2 stocks anymore.
If you're looking for a commission-free, low-cost UK ISA stocks and shares trading broker, then I recommend you Trading 212. Click on the link below. I've joined it. You can buy fractional shares. It's easy to buy, easy to use app for beginners, and also advanced trending tools that you're looking for. So click on the link below and join me now at Trading 212. Really, really good. See you soon.
So, like I promised, there's one stock. I've looked at every stock for the last 16 weeks that we've been in the lockdown. I've been in lockdown for about 14 weeks now, 14, 16 weeks now. There's one stock that's super resilient among all. Regardless if it's COVID-19, that stock will be selling. If it's working from home, that stock will be number one. And this stock might be the first stock to hit the $2 trillion mark. Yes, this company is called Microsoft. Microsoft is one of those companies that I have been buying since lockdown. I've been buying bet by bet by bet. You know, it's hovering between 160 to 180 days where it dropped to 145 during the last 16 weeks. So do watch out for Microsoft. If it does dip and go on a discount, buy and hold it long term. It's sitting about $1.5 trillion just now. It's got Microsoft Teams, it's got Messenger, it's got Windows 365. Microsoft 365, Office 365, it's got all sorts to keep people working from home. It's got the Azure cloud services. It's got the Xbox gaming system for people working from home. I think this is an all-rounder stock. Personally, if it goes down again, I'm going to buy it. I'm just going to buy it in the whole. I'm not even going to think twice about selling Microsoft. That's me. That's me. So I hope you find this useful update of what's really happened today. And remember your tier 1, 2, 3. Remember your diversified portfolio. Check out this graph that I always speak about in my video. You know, take profits if you can. Do not be too greedy. At the end of the day, it's a marathon. We just have to run through it. And finally, please stay safe. Coronavirus is still out there. Please do stay safe. Work from home is possible. Make sure your mental health is clear. And make sure everybody, you know, let's get over this 2020 thing. So it looks like the bear is back in town. Let's watch out for tomorrow, Friday. Let's see how strong the bear is, whether we've got a comeback with the bulls. Let's watch it. Let's watch the market open tomorrow. But for now, do check out your portfolio and go with diversification. So have a good day and hopefully see you tomorrow. See you then. Bye.